Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. Trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is homeownership consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks for having me back, Jim.
Ross, last week on the show, you offered a 70% income solution strategy to our federal government. 48 hours later, the government announced just that. Last week, you highlighted CIBC, and 6 days later, they were on BNN talking dividends as you were talking here. This week, we're hearing the black swan excuse for a housing meltdown. What's your thought on black swan events causing meltdowns?
Well, I think what a black swan event to me is, it's like we talked in last week's show. As you're walking out on a plank, and the plank's getting narrower and narrower, sooner or later you're going to fall off. What changes is the amount of wind that's needed to blow you off your footing so that you fall over. When the plank's wide, because, wind can blow all at once. You can even stumble, you're not going to fall off. But when you're out at the end of the plank and it's really narrow and you're maybe going foot in front of the other foot, maybe you're getting to a point where even your foot isn't, the plank's not wide enough for even 1 foot. A little tiny gust of wind blows you over. What we've got here in this current situation in terms of the housing market, I'm only going to speak to the housing market, you simply have an event that was of enough magnitude where, what the conditions that were already in existence couldn't withstand it. Now, obviously, there would be almost no conditions that could withstand this current situation that we're in right here. But what I will say is that regardless of this happening, the Canadian housing market was still in a correction. The black swan events of the Black Monday, where the stock market collapsed back in 87. We had the dot-com bubble bursting in the early 2000s. We had the mortgage meltdown in the United States supposedly causing a global recession in 2008. These were all based upon a black swan event. It was fear gripping the population to such a magnitude that their ongoing actions are changed. That's what we see a black swan event as they apply to housing markets. What is happening right now in the housing market would have happened anyway, regardless of what anybody wants to tell anybody. Math doesn't support a housing market perpetually functioning in the way that it was functioning prior to the middle of March. We could even say the fourth week in February. Everybody has to understand when they're looking at housing stats today. February of 2020 concluded with 29 days. February of 2019 had 28 days. This February ended on a Saturday, and that basically meant that all 29 days of that month had their sales reported by the time the local real estate boards released their data. Whereas previous year, you were down to about 24 days of actual reporting that took place. So right there alone, you've got an extra 5 days of reporting, which accounted for basically 20% of the difference. So your March sales anyways would have been lower just because of the way that the months roll out from year to year. Again, as we said in the show, for a couple of years now, that's how organized real estate fools everybody into believing that house prices change in 30 days when they never do. I think what your listeners need to consider is that in events like this, there are going to be consequences. And these consequences that are going to results from this event are going to be transformational. This is an event unlike all other events, Black Swan events, that have ever taken place. And we don't care what anybody else says. We know this to be true. You have a housing market that was virtually shut down within a 3-week period. What I mean to say by that is the only sales that are seeing being reported right now are sales that were a consequence of previous sales that took place in February. There were a few markets in Canada where the very first 2 weeks of March, fear of missing out was sending first-time buyers into the market. Those first-time buyers are going to drive the average selling prices in a couple of large CMAs lower in terms of year-over-year comparisons versus what was reported in February. Once again, as we have said, it has nothing to do with house price. It's stats reported by real estate boards to allow commission earnings to be collected. A Black Swan event of this magnitude has never happened before. And as a consequence of that, everything that we probably are thinking about today, how we live, how the consumers interact with the financial markets and make spending decisions are probably going to change. We are going to see the banking system. The banking system, so the board of directors of all the Canadian banks right now are now going to be responsible for structuring their banks in order to handle the next COVID outbreak, the next economic shutdown of a country. Whether that happens, 2 years from now, 7 years from now, 10 years from now, 15 years from now, or it never happens. Those banks are all going to be restructured as a result of this. Policymakers, OSFI, Bank of Canada, all of their policies are going to be shifted, changed because of this. The decisions that home buyers make are going to be, and homeowners make, are going to be drastically different as we exit this event, as we exit this period of time. The length of time it's going to take to get the economic engine rolling again, the way that we see things, because we look at things from a housing market perspective. The economists at the bank that are putting these results out, they just don't make any sense to us. We see TD Bank today released a report where they're saying second quarter GDP is going to drop by 25%, but they're going to have a 10% increase in third quarter GDP. We're saying, what the heck are you people thinking about? GDP is reported in year-over-year comparisons of the quarter. There is no way the Canadian economy in the third quarter is going to be functioning the same way or 10% quicker than it was in the third quarter of 2019. It is impossible. The amount of mortgage debt required to be booked to allow that to happen is impossible because the employment levels, the gains, the house price illusion that would be required to support that amount of mortgage debt is impossible. It's impossible from a mathematical standpoint, meaning when you have a formula that explains how a housing market functions, you understand the inputs into that formula that are required to get a 10% gain of GDP in the third quarter of this year don't exist. They just don't exist. You started the comment off, Jim, talking about the 70% income solution that we put up on the show last week prior to it being announced by a federal government or even talked about, okay? In Ireland, the day later, they brought out a 70% income guarantee. Canada, they brought out a 75% income guarantee. But what they're going to do, they're saying the government is going to fund that. What that means is every bank employee in Canada, every GM factory worker, every retail worker, anyone who goes back on the employment books, the government is going to pick up 75% of their income. And they're going to be picking that up for the foreseeable future. That means taxpayers are going to incur that amount of debt. When you do the calculations, when you don't use the strategy that we talked about last week, where that money is amortized over 30 years in a 4.42% returned bond to CCP, you're going to have to come up with that $100 billion some other way. So the deficit forecasts that we see right now, in our perspective, Jim, are just ludicrous. the way that we look at it, we're seeing somewhere over $500 billion of debt going to be required to be incurred in this country by the various levels of government just to exit beginning on June 1st. Just for the economy to be able to exit this crisis starting on June the 1st. It's going to take $500 billion worth of extra debt to be accumulated by the various forms of government. I don't know if that number is ever going to be published. But what I do know is this. These talks of $100 billion are just, they don't make any logical sense. When Canadians are earning $100 billion in a month, the government has to pay 75%, one way or the other, whether it's a CERB, whether it's a CEWB, whether it's this 75% wage guarantee. The government is going to have to fund that through taxes. The magnitude of the deficit is not even being talked about today. Rightly so, we have to get through this situation. But the black swan event that is actually going to happen is when the cost of this crisis comes home to roost and gets reported. That's not going to be probably until 2022 before we finally hear the cost of this situation. This black swan event quickened the housing correction, which was currently in its third stage of a housing correction. Now, again, I tell your listeners, go out and try to find some place where academics or economists have clearly laid out the stages of a housing correction. Because the little tiny bit of an increase we saw the last couple of months in the Greater Toronto area had nothing to do with the housing market getting busier again. It was simply a third stage outcome of a housing market. In other words, people had entered into contracts years ago that were now coming up to fulfillment, which caused other functions of the housing market to take place, i.e., allow trade-up buyers to buy more expensive homes, which then gets reported by the local real estate board as rising house prices. There's not enough. That sets off fear of missing out, which causes too many buyers to enter the market at a given moment in time because there aren't enough houses listed for sale, which further reinforces through confirmation bias the opinion of everyone who's recording a housing market, basically except us. So the black swan excuse is simply the cause for a quickening of the stages of a housing market correction. This black swan event is the first black swan event, the very first one, which is legitimate, because we have effectively shut down our country. We have shut down our economy. We have shut down the housing market. I don't care if they report there was 5,000 sales across Canada in March, or in April, then this next month. March sales are already done, folks, so you can listen to what any realtors you want. Those sales, the decisions that were made throughout March had already been predicated. If you were watching daily housing market sales and weekly housing market sales from the third week in February forward, you knew where you were going to end up at the end of March. There were not enough first-time buyers entering the market to sustain the market. There will be sales going forward. Those sales are going to have to take place for various reasons. But there is not a multiplicity of sales on the upward swing that is going to be taking place. It's going to take a long time for people even to recover their down payment savings. So the existing buyers who were looking to buy a month ago, or let's say a month and a half ago, they will not be in the same position they were when we pulled out. I really don't think people are discussing, Jim, the reality of what's going on right now. Let's look at household income to debt ratios. We're like 175 a month ago. Quietly, the Bank of Canada Governor Poloz was goosing the lenders again, goosing the mortgage market again, trying to convince people to go and spend money so he could leave in June with an economy still walking the plank. Okay, well, he's going to be exposed now for the fraud that he was, because it is black and white what was going on then, 6 weeks ago, and what is going on now. You have a shut down housing market. At the same time, your economy has shut down. Let's just say, for the sake of the argument, folks, that incomes now are at 75% of what they were 6 weeks ago. Your incomes are at 75% of what they were 6 weeks ago. I don't believe it's that high, but let's just use that number so it doesn't sound so bad. That means household income to debt ratios that were at 175% today are over 200%. Go out and try to find that reported somewhere. You won't find it. But I'll bet you a week from now, after this show goes on live air, and after our reports go out to our professional users, you're going to see the exact same comments start to take place. Household debt to income is probably over 200% right now. It's probably over 200% because incomes have dropped. There is everything that the rating agencies were warning about when we were at 165% has been now thrown out the window. We're now probably over 200%. We won't be until July or August or September at the earliest where we're going to get back to 180%. Think about that, what this specific occurrence has caused. That's why we are going to be transformed as a result of this crisis. Things will never be the same. The way that we look at things will never be the same. I mean, personally, I will after this event, I will have a supply of health supplies that I carry in my house. I will have masks. I will have gloves. I will have items that I think going forward, if this happens again, could benefit me and my family. Families are also going to start saving more again. They're not going to look to save money in their house because they're realizing now that cash isn't accessible unless you had set up a mechanism to allow you to access it at this time before this crisis ever happened. Most people are simply going to save more money. They are really going to start practicing this closer to the 6-month rule. They'll probably do 2 or 3, but there'll be people who practice the 6-month rule, which has been recommended for generations. This is a unique occurrence, I believe, in the history of economics. I certainly know it is a unique occurrence in a housing market, and I do know this: what organized real estate will be forever transformed by this crisis. Organized real estate, as you know it today, will not look this way coming out of it. The cooperative listing service house price pyramid scheme will be debunked because right now, there is no fear for the person who debunks it being the blame for an economic crisis. This situation has opened the door for the shills and hucksters to be exposed for what they are. That door was closed from June of 2013 until today. There will be no blame placed upon the person who exposes the fraud that has been ongoing, exposes the incompetence of economists and academics in their study of housing market. That fear has disappeared. There is no way to run from it. When we talk about a black swan event, flat world beliefs on a housing market will disappear. That's the black swan event that happened.
We'll have more with Ross Kay right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener asked about the deferred mortgage option and whether it would harm them using it.
Great question. I have seen social media posts filled with opinions from all types of so-called experts about this, and I will express to the listener, if he's happened to tune in or she's happened to tune in back in the show, our answer to this. A deferred mortgage option should be fully enacted using the correct strategy. What I mean is, if you just walk into doing something like this without having protected yourself and protected your future, you're going to be making a mistake. You are someone who should probably not be accessing the deferred mortgage option. You need a written letter from your bank, preferably someone higher up within your local branch. In other words, not just your loans officer, maybe your branch manager, that states that if you defer mortgage payments, the bank will not be recording those against your credit score. The bank will not be reporting that you were delinquent or you deferred mortgage payments. You need to have a letter in writing that states that before you do it. Why? If you don't have that letter, you have no way of going back to the credit bureaus and challenging the fact that someone further up in the bank or an automated reporting error or something else took place where your deferral is actually recorded in your credit score, dropping your credit score. You can argue all you want. If you don't have written proof of an agreement between you and the bank that they will not negatively impact your credit score as a result of you deferring your mortgage option, your mortgage payments, you shouldn't do it. Or if you're going to do it, you know going into it, they are going to negatively impact your credit score. Will it harm you using it? If you do it and it negatively impacts your credit score, yes, it's negative harm. If you do it without it negatively impacting your credit score, it will do you no harm. It will do you only good. It is far better to have money in the bank, which you're only paying 3%, for the sake of the argument, 3% interest on annually, compounded semi-annually, not in advance, in a time like this, than spending it to maintain your credit score. If you're thinking about trading up houses, in other words, you're looking at this so-called black swan event as a golden goose. You are someone who is going to capitalize as we're exiting or as this black swan event fully gets recorded economically in the housing market. You're someone who's going to want to take advantage of lower house prices going forward. Okay, in those cases, it's better that you have cash on hand to allow yourselves to do that as you're coming out. As long as the cash on hand is simply taking a mortgage payment from this month and moving it down the road 20 years from now, go ahead and do it. It just makes great financial sense. In other words, when you sit down and do the math, it really makes sense. And it makes sense because you have more cash available to you to get through the crisis or to make a decision coming out of it. If you're given the option of deferring a mortgage payment to the end of the mortgage term, not 6 months from now, or not 3 months from now, or not 4 months from now, but to the end of your mortgage term, and it's not going to impact your credit score, do it. Do it now. Do it just as quick as you can get those papers signed. Leave your cash, or even the income that you're getting right now, in the bank. Leave it there. Save it for a rainy day going forward. Save it so you can look at the situation as we come out of this crisis and make a rational financial decision. Because like I said in the previous segment, this is going to transform the housing market and our economy. Things will never be the same again. This option to defer a mortgage payment may cost an extremely high insurance premium going forward because the banks and CMHC is going to have to change their policies to reflect this risk. Added risk means more cost. Your banks are going to have to drop their mortgage rates coming out of this just to get some cash, extra cash coming into the bank for growth projection. Because if the banks aren't booking new mortgages and the existing clients are paying down the mortgage debt, that means the mortgage book at the bank will actually be shrinking. That has never, ever happened in Canadian history. When I say Canadian history, remember, this goes starting modern real estate sales began around 1980. So that's what I'm talking about in recorded history. So the simple answer to your mortgage option question is this: deferring payment. If you get in writing from your bank manager or your bank VP, assistant manager, that they will not touch or report to the credit bureaus that you have been delinquent in a payment or deferred a mortgage payment, then go ahead and do it. Take that money, don't spend it. Put it aside. You may need to spend it 3 or 4 months from now, or you may need to spend it a year from now. But do that. Do that calculating how much extra interest, just the interest, not the principal, how much extra interest that's going to cost you for the remainder of your mortgage term. Because that's the worst case scenario that I'm describing. And it's minimal. There is not a mortgage held by a major Canadian lender. So I'm not talking about these MIC mortgages or a home trust mortgage. I'm talking about by just a general mortgage lender in this country, where your mortgage cost for deferring a couple of payments is going to be anything over the next 12 years. Sit down, look at the numbers, and before you do it, get that letter in writing. Because if you don't, I can almost guarantee somewhere along the line there's going to be a mistake. And without you having a written verification from a bank manager that it's not going to harm your credit score, you are going to have a battle of your life fixing the mistakes in credit reporting mistakes that are possible without that letter in hand.
We'll have more with Ross Kay right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, many reports are coming out claiming that some buyers are taking advantage of this crisis to jump into the market. Others are saying pressure is building to act now while the fire is just simmering. What do you say?
What do I say? This is what I'll say to your listeners, and something I haven't talked about in the show before in the past. I've alluded to it, but I've never actually talked about it. And it's safe to talk about now, okay? Over 10% of all new mortgage debt booked in a year goes to pay real estate commission. Let me say that again. Over 10% of all the mortgage debt booked in a calendar year goes towards paying real estate brokerage. Now, you're not going to find that number in print anywhere, because even what the average commission rate charged across Canada isn't reported by anyone, because they have never had access to the data, and they don't have the knowledge of how to extrapolate it from a cooperative listing service transactions to come up with the actual number. We have tracked that number since 2010. We went back and post-tracked. So what I mean to say is that 10% of the mortgage debt that is booked in a calendar year goes into a realtor's pocket somewhere in this country. It is a profession where the median real estate agent in Canada doesn't sell one house in a year. Yet Canadians, 10% of the mortgage debt goes to fund that infrastructure. The reason why pressure is placed on buyers, not sellers, buyers, and is always placed on buyers, it is built into all of the metrics created by organized real estate and used daily and believed by economists around North America, is for that sole purpose. Because when you have a business that requires the consumer to take on 10% of their debt just to pay you, you have to really, really make things look different than what they are. Home buyers right now are being talked about the V shape of a housing market. In other words, it's going to be a V-shaped recovery. We're going to come out of this the same way we went into it. Hogwash. It's impossible. If someone tells you that, ask them to show you the housing market math that supports it, because it doesn't exist. Or if they did have a formula, They wouldn't be able to release the formula without the provincial regulator taking their real estate license away. There is no such thing as a V in a housing market. There wasn't a V in 1990, which started in 87. There wasn't a V in the dot-com bubble. There wasn't a V in the Great Recession. There will not be a V now in terms of a housing market. If you're lucky, it'll be an L. If you're lucky, it'll be an L. Or it'll be a W, okay? It will be a W coming up. And that W could be extremely wide. It could take a long time for the final upward swing of the W to take place. It just doesn't make sense. There are people coming out of this who are going to have to sell their homes. It only takes a very, very small number of those people to cause rapid house price deflation. Rapid. I can't really tell you the exact numbers because that's an internal number that we use, and it allows us to maintain the accuracy of our forecasts, and to give that out, that just doesn't make any common sense. But what I can tell you is that it doesn't take a lot of urgency with sellers to liquidate real estate, divest the real estate, what we call it. We call it the divesting stage, to cause rapid house price deflation. Because house price deflation is also, there's a bit of illusion to it as well on the way down. And as quickly as the illusion builds, the illusion in this particular instance is going to be able to wipe out. So what I would say to these people who are feeling pressure by reports that are coming out saying, oh, this is your chance to buy, or there's still multiple bids, or home buyers are still out there despite there being a lockdown in the country. It's all hogwash. It's all marketing ploys. It's all sales pitch. And it's the need to have those talking points is because you're 10% of the total new mortgage being booked in an annual year in Canada goes into a realtor's pocket. It pays the realtor. It pays their infrastructure. It's the reason why for every single one home buyer who purchases a home, that home buyer is paying for free real estate services for at least another 4 Canadians right now. And when we come out of this, that single home buyer will be paying for free real estate services for probably up to 7 Canadian families. The buyer, the person who actually buys a home, not the seller, the buyer, pays for all of the real estate services for all of their neighbors who didn't buy that month. That's why the pressure is building towards buying now. They need to cover their shortfalls. They need to try to keep this market going no matter anything possible. Now, for a very small, minor part of the Canadian population, Canadian homeowners, a very small percentage of them, and this percentage will remain this way for the next 7 years, this is harmful, but it's less than 5%. For 95% of Canadian families, lower house prices benefit you. You don't think they will, but they do. Lower house prices benefit you. Now, is it going to benefit you if your existing home declined in value by 30%? Obviously not. But on the other end of this, 12 to 15 years from now, it is going to benefit you. Because when you trade up to your next home, your monthly carrying charges are going to be lower, which is exactly what Canada is faced with today. Everybody's talking about rent. Look, the government has got a $2,000 a month per person CERB. They're offering businesses 75% income subsidy from the government. There is no need that rents should be at jeopardy at any time during this crisis. Any rent crisis, any people that were having a problem with the rent payment, we're going to have it regardless of this situation. There have been income guarantees enacted that allow you to cover your rent, unless you weren't covering them before this crisis took place. That is what we really need to think about when people are talking about homebuyers having to rush out and buy a house. No, they don't. They don't have to rush out and buy a house. Why would you go out and buy a stock today if you knew it was going to be cheaper tomorrow? Why would you do that? No rational human being would do that. There are people who are now homeless. Well, Can they find a rental in the short term? Well, probably not, because now landlords right now can't evict people. In other words, people who are already delinquent in their mortgages for up to 6 months, in their rental payments for up to 6 months, can't be kicked out of the houses today. Those evictions have all been stopped. Rightly so, but they've all been stopped. We have to understand the governments are giving Canadians enough guaranteed income today to keep a roof over their heads. That is what's going on. Once that relief is taken away, that is a different story. Then the real crisis is going to hit. And it is not going to be a crisis that is going to exist. It's going to be a crisis that grows. Because the very first thing you learn from housing market is this. The first-time buyer enters the market, you have one sale. If the following month another first-time buyer enters the housing market, you had 2 sales of first-time buyers, and then you're going to have 1 trade-up sale. It's called the multiplicity of sales. We believe it's also the multiplicity of the economy, the multiplicity of wealth. And as we come out of this, how we exit it, it is only going to get worse because the governments are not going to be able to afford to continue to pay Canadians 75% of the income they were making before this happened. EI claims are going to be higher. The housing market, foreclosure market, will begin to intensify. Now, how you look at foreclosures in Canada is not how you look at them in other countries. In other words, normally Canadians heading towards foreclosure liquidate their real estate. They accept the loss and get out of the market. They don't wait for the bank doesn't wait for the property to go equity negative before the bank seizes it. That only happens to a bank when a bank is caught off guard, where the bank hasn't been watching their mortgage portfolio, which doesn't happen anymore in Canada because of the OSFI change. So, first-time buyers, everything that if you're feeling pressure for any reason at all, it's because you're letting someone pressure you into a bad decision. As we said on last week's show, don't buy a house now. This Black Swan event, it could be your golden goose when it comes to the next 30 years of your life. It could be that if you simply allow time to allow the new normal to appear. I haven't read a single article published by a major Canadian bank or economic team that I could see coming to fruition as we get out of this. And that's because we look at things from a family's perspective. We look at it from a household perspective. We look at it with the understanding that the majority of the income people make goes towards keeping a roof over their home. That amount of income will not be the same no matter what happens as we come out of this recession.
Ross, thank you so much for the update.
Thanks for having me on, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. If you have any questions for Ross or any of our other guests, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our popular YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.